Good day. We are Group 8 and we're going to discuss Chapter 11 Financial Preparation for Entrepreneurial Ventures. My name is Anna and I'm going to discuss the importance of financial information for entrepreneurs. Financial information pulls together all of the information presented in the order segments of the business, marketing, distribution, manufacturing, and management. It also quantifies all of the assumptions and historical information concerning business operations. Now we're going to proceed to financial glossary for entrepreneur. Accrual system of accounting. It is actually a method that records revenues and expenses when they are incurred, regardless of when cash is exchanged. Next is asset. It is a resource with economic value that an individual, corporation, or country owns or controls with the expectation that it will provide a future benefit. Next is balance sheet. A statement of the assets, liabilities, and capital of a business or other organization at a particular point in time, detailing the balance of income and expenditure over the preceding period. Capital is a term for financial assets such as funds held in the deposit accounts, as well as for the physical factors of production. Next is cash flow. The total amount of money being transferred into and out of a business, especially as affecting liquidity. Next is cash system of accounting. It is actually an accounting method in which payment receipts are recorded during the period they are received, and expenses are recorded in the period in which they are actually paid. Next is collateral. It's an asset that actually a lender accepts as a security for a loan. If the borrower defaults on the loan payments, the lender can seize the collateral and resell it to recoup the losses. Cost of goods sold refers to the direct cost attributable to the company production of goods sold. Financial statement are written records that convey the business activities and financial performance of a company. Gross profit is the profit of a company makes after deducting the costs associated with making and selling its products or the cost associated with providing its services. Income statement is one of the three important financial statements used for reporting a company's financial performance over a specific accounting period, with the other two key statements being the balance sheet and the statement of cash flows. Next is interest. It is actually calculated as a percentage of a loan or deposit or balance paid to the lender periodically for the privilege of using their money. Liability, in general, is an obligation to or something that you owe somebody else. Liabilities are defined as a company's legal financial debts or obligations that arise during the course of business operations. Loss. It is actually a decrease in net income that is outside the normal operations of the business. Net profit is equal to how much the net income or profit is generated as a percentage of revenue. Net worth. It is actually a quantitative concept that measures the value of an entity and can be applicable to individuals, corporations, sectors, and even countries. Personal financial statement is a document or spreadsheet outlining an individual's financial position at a given point in time. Profit is a financial benefit that is realized when the amount of revenue gained from a business activity exceeds the expenses, costs, and taxes that needed to sustain the activity. Profit and loss statement. It is a financial statement that summarizes the revenues, costs, and expenses incurred during a specific period, usually a fiscal quarter of the year. Variable cost is a corporate expense that changes in proportion to production output. Working capital also known as net working capital or NWC, is the difference between a company's current assets, such as cash, accounts receivable, or customer unpaid bills, and inventories of raw materials and finished goods, and its current liabilities, such as accounts payable.